Hi everybody, this is Chris with Invest LYH, and today I'm going to show you a interesting tool that I found from, I think it was realtywire.com, and we'll see it on the tool because they put a link to their website. So once you see this tool, you can go to their website and get it. It is a little bit of a different version. I made it some adjustments to the version that I have just so that I can compare properties. So the video today is going to be about comparing two properties using cash on cash analysis and which property is going to be a better investment. So let's take a look at the screen here. Give me just a second. I'm going to just pull it up. So these are the two properties that we're going to go ahead and compare. The Leesville property for $114,900 and the Timberlake property for $121,000. They're 2-bed, 1-bath for the Leesville property and 2-bed, 2-bath for the Timberlake property. Now, keep in mind that this determines our down payment. And then I got our rentometer reading over here. This one, so for our average rents, this one I bumped up to $1,250. And this one I bumped down to $1,300. So from there. So hold on, I'm going to stop sharing this screen. And what I'm going to do is I'm going to share my screen with the Excel tool. And so here it is. The Rental Wire is the website. This was made by them. I made a few adjustments. Basically, they have all the beige inputs. So you just put in the purchase price, you put in the amount that you're going to assume that you're putting as down payments, closing costs. So it goes a little bit more into depth than my back of the envelope cash on cash return that I generally do for videos. But I think this is a great tool because if you set up they give you one property, but if you set it up where you have two properties, so I have the Leesville Road property there and then the Timberlake Road property here, what you can do then is you can create a dashboard like I have here where you can actively see you can see what's on the screen, the monthly cash flow trend, the cash on cash return, the income per year, and the first year's income, just so you can identify, okay, which of these properties meets my investment goals? Do I need to make more income on the first year? Do I need to have continuing cash on cash growth? This tool is very interesting that you can provide all that, and then you can visualize it so you can see actually how it looks. I'm a visual guy. As much as I love the data, I love to convert data into visuals so that I can see what the trend line is. That's probably my economics background. So let's go back and take a look at the tool. The growth rate is right here. So that's something that you would be able to change. And if I hit 4, for example, and then hit the enter key, you'll see down here that the cash on cash return will change when I hit enter. See how it changed for year 5, year 10, year 20, and year 30. So if I were to go back and hit 2%, it changes. So the growth rate is used for the expenses, and it's also used for the growth of rents. But this is an excellent tool. I love it because it allows me to understand what my year 1 cash on cash return is. And it also allows me to know what my cash on cash return expectations are going to be. I would say for 5 years, I mean, I know it goes into 10, 20, and 30, but generally, if I have a certain amount of one of the things here it tells you too is it gives you the total amount of equity in it. But I think that the growth rate is perfect for rental and for expense increases, but for appreciation of a property, I think that the growth rate would be a little higher than rents. Generally, that's what I've seen. And let's say the property increases by 30K and we pay down 10K, that at that point, we might be able to do a cash out refinance and pull out some of this equity, let's say 20K, and we'll buy another property with that. So in my scenario there, the projection for the 10-year, the 20-year, and the 30-year would not necessarily make sense because we're refinancing at that point. And at that point, if I'm pulling out $20,000, now that takes away from the $30,000 that I had, or $40,000 that I had in out-of-pocket costs. So I would have to adjust that. So that's just a little, that's like step two beyond this. But for an initial analysis of a property, I think that this tool would be excellent. So again, this is from the Rental Wire. Follow them on Twitter. They are great. They are great. Follow on Twitter. I'm gonna stop sharing here now. But yeah, follow them on Twitter. Follow me on Twitter, Invest LYH. And if you guys have any questions or concerns, please let me know. And I hope this video helped you guys. And if you guys want this tool, the one that I modified, I got to just double check with them that it's okay that I modified it and that I can send it out. But I think that they're going to have no problem with it. They did an excellent job giving me a canvas so that I can modify it to be able to identify which return is better based on two properties. And it should be no problem for me to give that to you guys. So thanks so much for watching the video, and let me know if you guys have any questions. Have a good one.